Hey guys, what's up? It's your man Pete, and I just wanted to let you guys all in on what's sort of been happening in the Toronto and GTA real estate market here in the past couple of weeks as I'm out there showing properties, meeting my clients, and we're analyzing the prices very, very closely because obviously we're caught in this sort of weird suspended time where there's a lot of changes happening in the marketplace. Buyers don't know what they should do. Sellers are not really sure what they should do. The first thing they should probably do is contact us here at Selling Toronto because we can help you get it done, whether you're buying or selling. But as we approach the end of the month of April here, after all these big economic changes like the Bank of Canada raising their interest rates, inflation is clearly still a problem, and of course the war going on overseas. But many of my clients and buyers right now are out there on the hunt. They're looking for great deals because they followed my advice and guidance, and because of that they're seeing a lot of really amazing property. Because it was only just a few months ago where there wasn't much supply, where everything was attracting 10, 15, 20 offers. And now we're not saying that the market is in serious decline. It's incredibly hyper local. Like, it depends on the neighborhood, depends on the area. Some areas are more sensitive to rate hikes, some areas are not. And so that's really what we're going to talk about and break down here today, which is the price trends that are happening across the city. I chose a sampling of different areas that I've been working in so that you have a better understanding of what's happening in these neighborhoods and how we can't overgeneralize the entire market. Like, we can't talk about Canadian real estate. We can't even really talk about Toronto real estate. We have to sort of talk about the different areas, regions, and suburbs and how they're reacting and responding to all the shocks that are happening in the marketplace. And so we're going to take a picture. We're going to do a snapshot in time right now to help you determine what's really going on. And so I promise you guys, you don't want to miss this episode. You definitely want to watch all the way until the end because it's going to give you a sense of how the market is responding right now and really where the best buying opportunities are if you're looking to buy a house for yourself, something like a townhouse or a semi-detached in this market right now. But before we move on, make sure you hit that subscribe button, give us a like, and we're going to go a little bit deeper with some stats and figures right after this. Okay, so for those of you who are new to the channel and who are new to me, we're going to explain a little bit what happened a little bit earlier on in the year. So between the months of January and February, it was intensely hot. There was low supply, tons of buyers, somewhat lower interest rates. Well, sorry, extremely lower interest rates. And then pretty much for the months of March and April, things have slowed down just a smidge because the Bank of Canada raised rates 2 times, 25 basis points, and then a 50 basis point increase that happened in the month of April 2022. And now there's fears of potentially another drastic rate hike, maybe another 50 basis points or maybe even 75 basis points potentially. I think they should probably be careful here because they could potentially also put the entire economy into a recession if they think they're going to try to do 75 basis points on the next move. That's just my opinion. And I talked about this in my last video where yes, actually rate hike increases actually help some buyers. It makes homes a little bit more affordable. It takes away some of that demand where those people who are sitting on the edge with maybe 10% down and can barely afford to buy, those ones might probably actually be priced out, which is actually a good thing because if you're just barely getting into a property, you probably won't be able to hold and sustain it for very long. But yes, even some of my buyers who are, first-time home buyers looking to get straight into a house or a townhouse, they were quite disillusioned in the first couple of months of the year where they were like, they didn't think that they could ever afford to buy anything. But because of the rate increases and because of some of that demand coming off, now they're able to buy a property that they never thought they could afford to purchase. That is a win, guys, in Toronto and the GTA market. And this is probably one of the biggest swings that we've seen probably in the last 4 or 5 years. And while the doom and gloomers and the pessimistic people are calling for a 20%, 30%, or even a 40% decline in the market, they're really just trying to get views from you on YouTube. That's not the reality out here. We're just not really seeing that. And yes, there are some neighborhoods and regions that are experiencing double-digit declines, but for the most part, the best areas in the city are actually holding up quite well, and some are actually even going up in price right now as we speak. And so I think you'll get a good sense of what I'm talking about as we compare the 2 months of January, February versus March and April. Because there seems to be a very clear line when interest rates were low and when interest rates were high and how that affected the marketplace. So let's take a look. Let's contrast and see how big of a decline actually happened in some neighborhoods. So without too much rambling, let's get right into it. Okay, so let's talk about the East End. Let's talk about East York, Leslieville, the Beaches, Riverdale. We talk about and we look at this market very intensely and closely because many people, especially working professionals who have offices downtown, who need to commute to work and they want to stay close to downtown, those are the most desirable areas that they want to choose to live in because there's more supply. The supply is typically older and smaller, but it's got that sort of great gentrified neighborhood vibe. And of course, the commute is excellent as you can take either a streetcar or the subway into downtown. It's a great lifestyle. It's very walkable. Not really for me, but I can see why the appeal is there. That's sort of been the epicenter for all of Canada in terms of the big boom that happened about 15 years ago in those areas where people were buying up the neighborhoods, renovating them, gentrifying, making it cool, giving it that awesome vibe, and then it sort of translated to other neighborhoods across the city and even across Canada too. And so if we take sort of a standard product in that area, which is a 3-bedroom semi-detached, which is very popular in that neighborhood, it's sort of just the general product that people can afford. In the months of January, February, it sold for about, on an average, $1.5 million, a little bit over 1.5. But then if we look at the most current trends in the March and April period, we can see that the average selling price for this exact type of product was about 1.475. So, you know, you're saving probably about $30,000 or $40,000, which sounds like a lot of money, but in real estate terms, it's not a lot of money. You might be able to get a new kitchen and some paint or something like that. So we're talking about a 2% decline, which to me is really just a technical glitch. And, you know, I was out there showing properties to some of my clients last weekend, and you could very clearly see that activity has picked up already. People are out there going to open houses. The prices and the offers are still coming in really high, really strong. Sellers are getting their numbers, maybe 2% less at the most. And so many of the people who are buying in the east end of the city are viewing this as a buying opportunity because they don't have to get into a crazy bidding war and go up a couple $100,000 at a time. But to be honest, you'd be surprised with the nicer properties, the stuff that's renovated, that has parking, a finished basement, you know, a good heighted basement. Those semis are still getting $1.5, $1.6 million right now as we speak. And so if we start seeing activity happening in the East End like that, it's only a matter of time before it picks up and gets even stronger in that neighborhood, and then it sort of spreads all across the city. So the East End of the city is the bellwether of Toronto real estate when it comes to houses. Okay, so now let's head over to the other side, the West End. Let's talk about High Park and the Junction a little bit, okay? And this area here is completely defying the odds. So if we look at some of the freehold properties in this neighborhood, it's actually up 11% from, you know, the January, February hot period to March and April. It's actually even hotter. It's the only area in my little sampling and study here that has actually gone up, and it's gone up double digits. Now, that's probably a function of it not having a huge amount of supply, you know, not a lot of properties coming up for sale, and there's just generally not a lot of properties in general compared to the East End of the city. And so if a property comes out, it's really exciting times and it really generates a lot of interest and activity, and, you know, prices get bid up pretty dramatically in those ways, kind of like how Vancouver is. But yeah, 11% with the interest rate hikes is simply extraordinary what's going on in the West End of the city. Okay, but now let's head up north of the city a little bit, okay? Let's talk about North York. So if we look at some of the more affordable properties in North York, such as bungalows, you know, the high price, the high peak that happened in January, February, those homes were averaging about a little bit over $1.8 million. But then if we adjust for the interest rate hike, we can see that the average selling price for similar stuff in the March and April period was $1.770 million, which represented a paltry 2% decline in the market, with this much shock to the market when it comes to interest rates. And so you can see that in the better and more desirable neighborhoods, shocks don't impact the neighborhoods very much at all. Where many buyers are actually looking at this and saying this is a good buying opportunity because the bidding wars aren't as crazy, you know, the interest rates are higher, but we can afford it. Those are the types of buyers who are out there looking right now, because if everything pans out and if everything's true where interest rates are going to continue to keep going up this year and possibly even next year, then right now would definitely seem a lot cheaper and you have a lot more inventory to look at. This is what the smart money is doing, and the smart money is definitely watching our channel here at Selling Toronto. Okay, so now let's go a little bit further out into the outer burbs. Let's check out Vaughan, okay? So Vaughan during the early part of the year was one of the hottest and most aggressive price gaining areas in all of the city. You know, you were literally seeing houses go up like 200,000 in a month. And it was really just a function of low inventory and extremely low interest rates, where their average home prices hit just over $1.4 million for a 3-bedroom townhouse. And then so basically for that same 3-bedroom townhouse, you know, if we were looking at it from, you know, March to April, then we're talking about 1.35. So yeah, you're saving maybe $50,000, you know, because of the interest rate hike, which sort of counterbalances itself, right? So you're paying more interest rates, but the property is cheaper. That basically works out to a 3% decline, you know, after all these major shocks. Now, we're not saying that it won't continue to go down. That is possible, but based on my experience, that sellers just will not allow that to happen. They'll let go of properties for $50,000 less, but they definitely won't let go of properties $100,000 less. So in Vaughan, if you can capture a double-digit decline and get yourself a deal, you should definitely snag it. What I should point out is that if you are an investor, if you're a serious accredited investor and you're looking for properties that you want to turn and you want to flip, or you want to hold on for a couple of years and see if you can make some easy money, now is the time to do it. You should definitely give us a call here at Selling Toronto. We've got a beautiful plan and strategy, and definitely the right people who can work on the projects for you, and we can help you make a handsome profit and turn you into possibly a full-time real estate investor. Contact is in the description box below. Okay, and now so we're going to head out east a little bit and talk about one of the hottest areas that was, we saw some of the most driving and aggressive prices similar to Vaughan, and that is Markham, Ontario. So Markham, similar to Vaughan, shot all the way up to $1.4 million for a 3-bedroom townhouse in the first 2 months of the year. And then in the last 2 months of March and April, prices hovered at around $1.32 million, which is an $80,000 drop, which is probably the biggest drop in this entire list here. And again, $80,000 sounds like a lot, but it's really not that much. And so that represents a 5.7% decrease in property prices in the Markham area. And I think that's somewhat palatable for sellers to be able to let go of their properties for maybe 5 or 6% less than, what it was at the peak. Now, again, we're not saying that it's not going to continue to decline. That is entirely possible. We haven't really seen like huge 10% declines. So basically, you're asking sellers to reduce the price by over $100,000 from where it was at the peak. But I think most sellers are not going to let the property go for that cheap. That's just based on our experience and what we see. So Markham is definitely somewhere that you might want to consider buying into, because generally it's a place where price gains happen very quickly, very aggressively. The neighborhoods are good. You have all the amenities that you would need. Houses are generally newer. They only require light touch-ups and light renovations. And again, like I said, if you're a serious investor, now is the time to be looking. Now is the time to be negotiating and turning properties into beautiful resaleable homes later. That's a big part of our business here at Selling Toronto too. Yeah, at the end of the day, it really comes down to your own personal preferences, especially if you're buying for a place to live in, right? Some people want to live close to the city. They need to be close to transit. They like the downtown walkability vibe. And they need to be able to commute to work in a short amount of time, like 20, 30 minutes. Yes, there are some sellers that are willing to sell for less because they simply have to move, right? But it all falls within a reasonable range. Then you also have some of these sellers who wanted to sell because their tenant moved out, or they bought pre-construction or something like that. And we're already hearing it on the ground where there's some sellers are like, you know what, I'm not getting my prices. I'm not getting the offers that I want. I'm just going to take it off the market. I'm going to rent it out for a year or two, or they're just going to do something else with the property. What happens is once some properties get sold, once some properties get taken off the market, all of a sudden you're in a balanced or even a tight inventory market again. And we don't know when that's going to happen. It could happen in 2 months, 3 months. There usually always comes a point where it's like, we're back to that same thing where it's like there's not enough properties. People are going after properties and they're bidding them up again. That's just history. It's not opinion. This is what we've seen. And, it's only a matter of time before that happens again. And so I would urge you and encourage you to look at properties now, because you're going to see some of the best properties out there. They're not going to be super cheap. They're still going to have a certain threshold for prices. But what you're looking for is to get a better property right now than maybe you could have gotten just a few months ago. But yeah, so if you guys want more details and you want to understand and analyze the markets a little bit better, then you definitely want to give us a shout here at Selling Toronto. Make sure you hit the subscribe button, give us a like. Feel free to leave a comment. It helps the channel. Thank you all. We'll see you again, and bye for now.